Okay, let's get into Pro Picks, Liz Miller's top ideas. Pro Picks is brought to you by ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's capital markets arm is a full-service investment dealer that offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information. Okay, Liz, before we get into each of the three stocks that you've chosen, is there a theme? Is there an underlining kind of North Star guiding these picks?
It was really that I was trying to suggest from a few different industries where I know there's question marks. And all of these are down a lot. And so that was the other reason I chose them, to talk about stocks that are really far off their peak, but to my mind, still have that very long-term potential and reasons to just take into account, the extreme effect of uncertainty in positions and in areas of our economy that probably are going to do fine once we get that certainty back.
All right, well, let's get into it with Evercore, which is your first one. And true to what you said, that's down 45% since September. So a really swift move to the downside. And it's a financial. What do you like about Evercore?
So we just talked about BlackRock and Blackstone. Evercore's probably a little closer to a Blackstone. This is a boutique firm, M&A firm. They do have some asset under management activity, but they're really looked at for their exposure to mergers and acquisitions activity. And the stock had an incredible run in 2024 as we all were anticipating these lower rates next year and looking for a lot of, we just talked about, this private equity holdings to come into the market. What we have now is an IPO market that's still completely stalled, and this stock has been just slaughtered for that. And for what we've just talked about, I think that once we find certainty, that will come back. 70% of Evercore's revenues are within the United States, so they're isolated and safe from tariffs in many ways as a service company. And I do think we will see future activity pick up. So I think this is a great entry point, very strong balance sheet, $14 billion buyback going on. With a couple of year outlook, I think Evercore's a great buy right here.
Your second one is GE Healthcare, and this one got taken to the woodshed last week. So you're picking it up on a pretty big down move. How much did it drop? Was it on earnings?
It was partly on earnings and certainly the risk with tariffs, some fears of supply chain interruptions from China. This is the spinoff from GE just a couple years ago. I think it was actually just early last year. And it's GE Healthcare. A lot of people don't know what they do. They are the leading manufacturer of imaging equipment like MRIs, CTs, ultrasounds. They dropped like 13% immediately following China's retaliatory tariffs and, an anti-dumping investigation that was started. The company gets a lot of components from China, and at the current tariffs being talked about, the company thinks its margins would take maybe a 10 basis point hit, which is not that bad. But obviously analysts are thinking it's more than that. What I love about this company, and I said I would talk about AI, I think where you're really going to see AI make a difference early on is in companies like this. They are working to incorporate even more AI into the software of these machines so they can just transform diagnostics and give even more precise outcomes and solutions that become very personalized therapies. I think that we are going to see AI in a lot of healthcare equipment in a transformative way before we see it other places. So again, I think you need a couple of years outlook for all of these, but I think it's a time to swoop in to GEHC.
So you're right. It was the spook was in beginning of March when it was all about tariffs. It dropped like 16% on the one day, and it actually reports results on April 30th. So you're talking about getting in front of a stock maybe ahead of those earnings. When there are these tariff concerns, what can the company say? What do you expect the company to say that could potentially provide some support to investors? So not so support, maybe some comfort to investors.
I think all of these companies are going to have a really hard time speaking to any type of guidance because GE for healthcare, for example, of course, makes these incredibly expensive machines. So there's two questions that we have for what their future looks like in the near term, because we think their customer is equally uncertain and probably is pausing some of the purchases. They may talk about a backlog of orders that are being delayed. So that won't be surprising because just as we talked about people stopping to buy, not buying their sweet green today, corporate executives are holding off making big purchases as well. They're under the same uncertainty, if not more. But it would be nice if they maybe give some guidance, if they have any, on, how much of their supply chain is at risk or what they're doing to think about their supply chain in a higher tariff environment. I think that will give the analysts who are really tearing this apart, more information to be thinking about the long-term opportunities for them with their equipment and with the global general demand of their equipment.
Okay, your third pick is Carlisle Companies, not Carlisle Group, which is the private equity. So Carlisle Group is ticker CG. That's not what we're talking about. We're talking about Carlisle Companies, ticker CSL, and they do something very different. What's the play?
So this is in the construction area, and that's another area that, of course, has really been hit. I mean, the homeowners have been devastated, home builders, excuse me. Carlisle Companies is in an interesting niche. They do roofing, but they really do highly engineered roofing and waterproofing. They are definitely being hurt by slowdown in commercial construction, but they also do a lot of work in retrofits and repairs. So that's going forward. And so even as homeowners perhaps aren't buying the next home, then the current homes and the current buildings need more maintenance and they have exposure to that. So that's great. This is another unique company that while they had been actively working to expand globally, 90% of revenues still come from the United States. So now we're talking about a play that's about tariffs on the supply side, but more so about interest rates in the US for their end markets. They're going to report just this week on Wednesday before the open. So we have just a couple days there. They're trading, at about 16 times this year. The stock is down a lot from 480 to around 350, another stock that's been devastated. But again, a stock where we think the product has pretty consistent demand and lots of upside. And once this uncertainty is settled, there's a big piece of that downside that'll immediately go away.
There is, I think, a lot of depression around home building in general, and even results from D.R. Horton signaled that, it's not brightening up anytime soon. Orders are down huge, and just with rates remaining elevated, Americans just aren't moving. So do you have, is this a bit of a more longer term story? Like, you don't expect this story to inflect this year, do you?
So I think Carlisle is in a unique position where part of their business will start doing better as soon as we know the tariff situation. But yes, the real upside then comes as a second piece of good news once construction takes off. Carlisle did very well last year, even while we still knew we had high rates and a low construction environment, and certainly, moribund home building. So it has other exposures, particularly, as I said, with the retrofits, the fixers, where there's got to be a lot of roof replacement. And that's the part that's been so stalled with the tariff uncertainty.
Liz, it has been such a pleasure. Thank you so much for joining us and bringing us these ideas.